Everyone, welcome back to the channel, and this video is very serious if you actually want to make life-changing money from futures trading. And I'm not going to cover the spot trading and investment stuff here because if you are an investor or a trader and you are in our group, definitely you should have your max allocation in the spot right now because it's bear market, so you can make very good returns in the bull market. Apart from that, there is something which is futures trading, and you all know that we are providing signals and all that you are following. But a lot of people make $1,000 in one day and they just get liquidated in the another day. But that is not trading. Trading is one of the most easiest way to make money if you understand the things. So in this video, I'm going to make you understand the risk management strategy which we are going to use, and using that understanding and approaching it as a long-term process. Okay, so you are going to make and you will see the results. So now let's get on the screen and let's understand these things. Now let's try to understand what is risk management. Okay, so risk management in trading is like defending your or protecting your assets. Okay, so it means that understanding what should be your ideal risk. Like if you are taking a trade, what should be the risk? Like if I am putting or I am having a portfolio of $1,000, should I risk $10, $20, $30, $50? So this is something people need to understand. So whenever you're following a signal or taking your own trades, you need to understand that there should be a stop loss or there should be a risk that you are not going to risk more than that, and you have to make the rule in your trading that you are never going to risk more than that. So that is your deadline. Okay, if you're not following the rule, I guarantee you will lose your account. Okay, and now it's a chance that your trade may go not as planned and leading to financial losses. So not every time you're going to win a trade. This is the good reality of trading, that you are not going to win every time. So that is why we need stop loss, we need invalidation points, or we need the risks. So basically this is what it is. And then the ideal risk for each trade is 1 is to 3%. So basically if you are taking a trade or if you are following even your own trades, you are not going to risk more than 1 to 3% depending upon your appetite. So basically if you are having, for example, $1,000 capital, then you are not going to risk more than $10 to $30 in one trade. To understand what is your risk and how to manage the risk, there is a video on how to use the risk management calculator, and there is a risk management calculator in our classroom section as well. So if you are looking for that, just ping any modes right there, we will let you know. So using a risk management calculator is very important while you are taking a trade, so that you will understand how much should I risk. Now I'll show you, once you start risking and following the rules, what can happen. Okay, okay, before I take to you to the results, let's try to understand what is RR, which is means risk to reward ratio. So it is crucial concept in risk management because that helps you to understand your potential profitability of a trade and to understand what is RR. So basically R is your risk and R is your reward. So risk or R is the amount of the money that you are willing to lose on a particular trade, and it can sometimes it is percentage or a fixed capital. So for example, as I've told you, the ideal risk is 1 is to 3%. So your R is 1 is to 3%. And what is reward? So reward is the profit that you are aiming to make on the trade. It's also expressed as a percentage. So for example, if I'm risking 1 and I can make 3% depending upon how much RR is the risk. So now let's take example that the risk to reward is calculated by dividing the potential reward by the potential risk. So for example, if you are willing to risk $100 to potentially make $300, then the RR is 3 is to 1 or 1 is to 3. So basically if there is a 1 is to 3 risk to reward trade, then if you're risking 1% there, you're making 3%. So I will consider R as 1%. That is something I risk. If you can risk 2%, it's up to you. I do not advise anything above 3%, but if you are willing to stay below 3%, it's okay. Okay, so still it's your risk appetite. Like if I am having a huge account, a small account, So for example, I have let's suppose I am having 100 or $1,000 for example, and I'm okay to risk $10 to in one trade, maybe $20 in one trade, or maybe $30 in one trade. So at that particular time, I will risk as usual. So for example, if the trader is saying, okay, I'm risking 1%, or so you can risk 2% there, because you're just, the trader is basically risking 1%, but you are risking 2%, or anything below 3% is good. So that should be cleared before we move to the next point. Okay, so now I am something going to tell you, and this is the sad and the good reality of trading. Now I'm assuming that you all are starting after you all are clear with everything. For example, you know how to put a trade, you know what a risk management, you are clear with using the risk management calculator and all that. Okay, and I'm going to make this video shorter. I've explained this in a previous video, but I will explain it again and will make it shorter. Okay, so now I'm assuming that you are starting with 1,000 pounds. Okay, and I'm saying that, and listen, you're not going to have trades daily, you can have at the same time, it depends totally on the market. Okay, so when there is no trades, it's okay, but our main target is making 15% monthly. So now let's try to understand sometime. Okay, I'm saying that one trader will give you plus 10 hour per month. Okay, either it's me, CB, Bowsy. Okay, so if you're following any one of us, or if you're following all of us together, we actually assure you that you will make 10 hour every month, or 15 hour every month. So some month can be very great, some month can be not that much great. So some, for example, on some week or some month, we all together just make 10 hour, or but in the another month, because the market was good and there was huge opportunities, we make 30 hour or 20 hours. So I'm taking average that we all are making 15 hour per month. Okay, which is 15%. So if I'm just risking 1% of my account on one particular trade, and which is the least, basically if you lose your whole account, it will take 100 regular trades to lose. Okay, so basically if you're having $1,000, you're just going to keep the $1,000, you're not going to increase or decrease it for the whole month. That is the first rule. Okay, but let me try to explain you. And I'm saying that anyone here can live for next 5 years on the earth. Okay, so I'm assuming we are going to do this for 5 years. Okay, this is compounding and this is trading. So trading is why people say trading is a long-term success. Okay, and I'm saying you are okay. I'm just expecting quarterly. Quarterly means to, every 3 months you are just adding $200 to your futures account from your salary, from your spot, or anywhere, I don't know, but I think this is some ideal stuff. And now I am assuming that my starting balance is $1,000 or e-pounds. I'm making 15% monthly on an average, because some month we can just make 10 hours, some month we can make 30 hours. But I'm not going higher. I'm going with just 1% risk, and I'm going with just 15 hour per month, which is the least. Okay, I'm saying that if you will risk 2%, you can make 30% as well, but I'm going for the least. So even though if you have big or small capital, if you are a day trader, you don't need to make another account or anything like that for this. Okay, so you're just going to follow the trades with 1% risk. That should be on your mind. And now let's calculate. Okay, so this is something you can see, and this is the amount that you can have after 5 years. How much it is? 1, 10, 100,000, 10,000, lakh, 10 lakh. Is it for real? So yes, it's not unreal, it's real, and I'll explain you how it is possible. It's basically $6 million or pound. Okay, so now I will show you is it a scam or real. Okay, so yeah, I'm not here to give you an exceptional results, but I'm just showing you the reality. Okay, and 15% per month is the least. I'm not right, and $200 adding quarterly. I'll tell you the rules to follow this, but now let's try to understand, and let's see if it is even real or not. So I'm going to see monthly breakdown of this. So at the first month, I'm starting with $1,000, and the first month I'll make 150 pounds, because 15% gain is on 1,000 pound is basically 150 pound. Okay, So this is my the first month I'll have only 150 pound, and you will say trading is scam. I joined this group to make 10k dollar in 1 month and I didn't make. And you will say, oh, this is a scam, and 15% is something, even though if you miss some signals still you can make it, because I know everyone cannot catch all the signals all the time. Okay, and on the second month what will happen, you will make $172 pound. Okay, why? Because now your portfolio is not $1,000, it is $1,150. Okay, so on the $1,150, the 15% of $1,150 is $172, and next month your account will be something like this, and it will just keep going, and at the 15th month you will have 10,000. And this is some real stuff. Okay, this is not a lie. You can just go on the calculator website, the calculatorsite.com, and you can just search forex compound calculator, so you will find it. And by the end of 60th month, or basically your 5 years, you will have $6 million in your account if you stick to it. Okay, and this is not unreal. 15% per month is unreal, guys. No, because 15 hours is something we can almost guarantee you. So now let's try to understand the rule. I hope you understand this and you all are clear with this and you understand what could be the result. And to follow this strategy, what you need to do is you have to open your risk management calculator, and this is for not the beginners who joined this group just today. First, go and check out how to use risk management calculator, how to put trades and all that. Then watch this video. Okay, now what is the rule? So basically, the first rule is you are not going to change the portfolio size for 1 month, saying that 1 December to 1 January, no change in account you will do. So now let me try to explain you this, that okay, so if you take on your risk management calculator, you are because they ask the balance, so you're putting your balance $1,000, and what is the rule here is that you are not going to change the $1,000 for 1 month. So if I'm starting from 1 January, for example, I'll don't change $1,000 for the whole month, no matter if I'm winning or I'm losing. It's still, if even if I'm $990, $980, or $1,030-$1,040, I'm not going to change it. I'll keep it same for the whole month and on the next of 1 month. Okay, so for example, one okay, so I just, so for example, I'm saying that 1 January to 1 okay 31 December, I don't change, I just risk $10 on every trade, which is 1% of my account from the starting day. Okay, so if 15 hours is there, then you will make, if you are risking 10%, you will make $150. Okay, and then on 1st January, what I will do is I will check my account size. It is not sure it will be $150, it will be $120, or it will be $180, whatever the size is, you are going to put that. So I will see on the 1st of February, I will change my balance account on my trading risk or risk management calculator to $1,150, or whatever the portfolio is on the starting of the month. Okay, so understanding it is $150. Okay, I will do this, and for the whole February month, I'm not going to change that. I'll keep the $1,150, and it will be like $11.5 risk will be on one trade, and I'll keep it for the whole month, and I would target to make $172. This is the least. Okay, so don't worry, I think you can make it. And some months, yes, I do not guarantee, because trading, there is nothing 100% assured. So some month you might just make not 15%, 14%, and next month you can make 30%. So whatever you are making on the 1st of every month or on the starting of every month, basically once your 1 month is completed, you are going to change the balance and you are going to increase your risk, basically in not in terms of percentage, no, but in terms of dollar. Okay, because once your account is at $150 or 1,150, you are risking $11.5 something, but you're still risking 1%. So you are not going to do it daily, but you are going to do it on, like, changing a balance should not be done daily. Changing your balance should only be done on 1st of every month. Okay, so this is the rule which you are going to do. And now as I have added $200 quarterly, So if you can or if you cannot, it's up to you. If you can add $200 quarterly to your account for next 5 years, keep just do it and see you after 5 years. So this is something you can make, and this is not guarantees, guys, but this is the least which you can make. I think if you follow the risk management and if you understand the video, you can make it, okay? And I'm not giving you an exceptional thing. I'm doing it for more than 1 years personally, because I'm not in trading for like 10 years right now. I've just started it. I'm doing it for 1 year, and I can say you I'm above 7,000 pounds, okay? I'm just not on $7,000. I am way up comparing that, okay? Because I do some scalps and I'm a professional trader, so I can have more win. So this is something I'm doing for 1 year, and I'll also show you the result after 5 years. So if I'm able to make this money or not. And this is what I want to teach you, and the main reasoning behind making this video is basically making you understand trading is not a one-day game. But once you understand what is trading, you can completely change your life, whole career. It's just either it's 5 years of hustle or it's, you know what it is. So this is all about today's video, guys. And if you have any doubts, you can tag me or Harsh discussion channel and I will reply you there. So that's all about today's video, guys.